Hello traders, this is Marek from Trading Academy. In this video we will carry on again with the price action pyramid level 3, the structure. In previous video I was talking about some general stuff, and in this video we will enhance it. We will more work with examples, and you will learn really important tips which will improve your profitable trading. And at the end of this video, I would like to give you one basic tip which beginners usually don't see, and they do really big mistake. So if you want to learn this tip, stick around in this video and we will talk about the structure. Before we will carry on with the examples, I would like to repeat some important notes which we were talking about in the previous video. The first one is why personally me use the structure, because it gives me a matrix how price has been built at certain assets, and because of that I can determine important level. The key levels, as mentioned in previous video, are more respected by position traders and bigger institutional traders. The second one is spot which pair could be involved. It's very linked to that because different levels, different type of orders, different type of traders, different type of behavior. Third tip is recognize strong and weak barriers. Because of that, you are able to spot which players are involved, and because of that, you, for example, if you are trading against a strong order from key level support, your chance is much more lower than if you are trading this at intraday level and you are speculating against a weaker barrier. The another one tip is that it gives us idea about liquidity. If you are trading some level, intraday level, which is not so important, there won't be many orders in that level, and means that you are not able to use bigger sizes if you are a bigger trader. And again, it's the same from opposite. If you are a small trader, you can use this type of barriers or structure from lower time frames, which are not so important, and you can make money with smaller capital. And the last one is that it gives you an idea about the potential of trade. If there is a smaller structure again and there are no so much orders, this level is not watched many traders, it's not likely to happen that the market will give you big movement. And in the other side, if you see that the structure here is very important and above the structure or below the structure there is not so much orders, you can expect that there will be big movement because of the gap from previous structure. But we will talk about this more advanced stuff maybe in the future. But in this price action pyramid, we will give you really basic stuff and tips which will help you in your trading itself, and then we can carry on with advanced stuff. So let's start with an example. I am using now TradingView by the same market as in previous video, GBP USD daily time frame in the moment. I just wanted to show you how we can work with a risk reward ratio and what kind of different tactics are used by position and swing traders. As mentioned in previous video, market is in downtrend from higher time frame, and we can see this important resistance level here. I draw it this like that, but it's not so important how precisely you will create it. Depends on your tactics. What I am using, let's say, common sense and the touches, how market is touch the certain level. For me, I need at least two touches to draw support or resistance level. As mentioned before, traders can use different type of tactics where they could open the position. If you are open position closer to the bottom of this resistance, for example here, or here, or here, here, or here, it means that you need to use bigger stop loss. Otherwise, you are risking that you will be kicked out by the market from the position. And logical stop loss could be above this wick, or even better if you are using the structure and liquidity above this structure here of orders. because market function is to provide a trade to people. This is the function of the market, why the market exists. And we need to think about that. Market is behavior of people and it likes testing where buyers and sellers are. So if you will think about that, it's the basic of finding good entries at support and resistance levels. And back to the risk reward ratio, you can open the position here, but you need to work with higher stop loss in terms of pips. For example, I would work with this kind of stop loss. It means that depends of your trade, where will be your profit target. It could be here. So now you are working with risk reward ratio 1.64. Other tactics is that you could use different type of level of entry higher. For example, here or here, maybe somewhere in the middle of this resistance. And it means that it will give you better risk reward ratio with bigger profit target opportunity and lower stop loss. But you are risking that you won't be filled and market can go without you to your take profit as it happened here, here, probably here. But for me, this is not so nice level for this entry in case of this daily time frame. So now you can see that with different type of area of entry, you got much bigger risk reward ratio and you are risking much less, let's say. And the last third type of strategic opening could be this level, the edge of this resistance could be here. It means that you will get great risk reward ratio, but less probability of pairing the order that you will be filled. So in trading, it's always like chess game. If you want to make money more often, you need to risk more often. If you want to risk less, it means that there will be not so many opportunities. And this trade give you risk reward ratio around 4. This could be 2.5. This could be around 4. And the first one is 1.6. And it really depends what type of trader you are, what is your edge. If you are more successful, you can use, let's say, lower risk reward ratio. If you are less successful, it's better to keep still bigger risk reward ratio if you are working with support and resistance levels. And this type of strategies are used also by position traders, swing traders. They are thinking about where is the best area to open the trade, which will in the end impact your profitability. For me, this was the main point I would like to give you in this video, and I promised you one of the tips I would like to give to you. So let's go to that. Let's say that you are intraday trader, scalper, and you are using 5-minute time frame. And now you can see that market is down trading, creating the swings. And now you have really nice opportunity to open this flip here. I mean, open the trade at this flip regarding the short position. Still momentum movement down, and you are able to open the position. Would you open there? What is the probability that it will happen? Depends on the structure, really, because from this chart only you can see that the situation looks nice. But if you look from daily time frame, let's say that you would open the trade here. Let's go to daily time frame. And as you can see, you would open the trade against really important daily support. And you need to be aware about that if you are trading against these levels, you are against the bigger players, which could also speculate on long positions with bigger orders. So you as a day trader, you need to be aware of that, and this particular support is much more stronger than the resistance from daily time frame. And usually traders who are scalpers do not analyze that so often. And in terms of probability, I know that in terms of probability to trade this type of situation, it's much more lower chance that you will win. And in the end, you can see what happened. From volatility, you know that now it's rising volatility in terms of consolidation. It means that, okay, there can be some reversal in the end. So here I would be much more careful, and I would maybe probably I would not open a trade here because of this strong support level. And in the end, you can see the bounce that there were counter traders against you. They were stronger than before you've seen here. And here you can see also the volume that there was momentum against you if you would open the trade. But depends really on your situation. At the end, depends what the type of trader you are. I know that from the probability that there is a chance that market will at least test this lower swing here because of the momentum movements. If you haven't seen that video, go directly there because you will know after that what I'm talking about. In the end, market broke this level. But in terms of probability, you now have an idea how you should operate with structure and support and resistance from different time frames and different type of order flows. So thank you again for watching. I hope and I believe that this lesson will help you to understand the market more deeply. And in the end, you will select your trades more professionally. It's about to select the best situation which you are likely to win. So thank you again, and for more tips, don't forget to subscribe our YouTube channel. Don't forget to follow us on Facebook, click the button on our pages, on Instagram and so on. And meanwhile, select the best trades.